Hey, Las Vegas, thanks for joining us back here at Vegas Realty Check, your local Las Vegas real estate news show. And today's question, I'm your host, Trish Williams.
Wow, and I'm the co-host, Tiana Carroll.
Tiana, thank you for being here. Well, thank you for being here always.
And thanks for being here always, too.
Yes. And today's question on our show is going to be, why do I need an appraisal? So we're excited to talk about that.
Yeah. Not most. All finance loans usually have some sort of appraisal. So we got to talk about what that is and why our clients and our audience need to know about it. But before we do that, we always get into the numbers because tracking inventory here in Vegas is such a key look into what's going on in the real estate market.
Yes, and our inventory week after week is dropping again.
Yeah, slowly but surely the decline.
Yes, I heard a speculation that we're going to be under 3,000 by the end of next month. So let's see.
Well, that looks like it could happen, right?
Yeah.
Because each week we're losing a couple hundred homes to sellers and they're not coming back on the market. So going ahead, like just, beginning of last month, we were over 4,000, and today we are sitting at 3,655 available single-family homes in the Valley.
Yes, and we have 106 price decreases.
So that's saying pretty normal, about 100.
Yep.
Each week, things are happening.
Yep. 540 sold. Our sold numbers are doing healthy. I think they're healthy right now.
Yeah, good sold.
One of the things that I think might be a factor behind the inventory declining is not only that the homes are selling, which is obviously happening, but I still think that there is quite a bit of sellers not putting their homes on the market because the rates and things like that, because they have to have a move-up home.
When you're going on the listing appointments, because I'm hearing the same thing.
Yeah, that they're looking, that they want to get into a move-up home, but with interest rates, price, payment, everything, it's hard to make that make sense.
Yeah, and I agree with that. Like the want is there, definitely. Everybody still wants to upgrade and still move and all of that, but the ability to and the affordability right now is a little bit out of grasp for them.
Yes, absolutely. And it's almost like they're being trapped in their homes again, but not due to a value shortage like we seen like back in 2008, 2009, or 2009, 10, but they're trapped in their homes because of the affordability of the move-up home.
Right. Well, they're trapped in their home because of the interest rate.
Yeah.
It's hard to swallow going to a 7% interest rate when you have a 2.75 or a 3%.
Right. And there does come a time in life where you have to move no matter what. You have to make it happen, and those are the people that we're seeing that are getting into the market, getting their homes on the market, and doing whatever it takes to move forward. They still have equity, though. That is a good thing. People still have their equity.
Yeah, that's our foundation right now to keep everything so stable, is that we are valued right, and we do have the equity in like 40% of the home. So
yeah. Speaking of equity, we are talking about appraisals today.
We are.
So appraisals are, when you're purchasing a home with a mortgage, 90% of the time it's going to be mandatory.
Yeah. And that's because the appraisal isn't there for the buyer. The appraisal is there for the bank.
Yes.
Let's make sure that if we're going to lend money to these people, that this house is worth what we're going to go ahead and give them. And they're not going to give you a penny more than the value that it comes in appraised.
Absolutely. And I was digging through the internet, just looking at, seeing any additional information I could find on appraisals that I don't, I think I know quite a bit about them. We've seen,
so
we've seen
for
a few
the record,
hundred.
We're not appraisers, we're realtors, but it is something much like the title and escrow, the lending process. It's part of our transaction. So we have a very, let's say, rudimentary knowledge of what it is.
Yeah. Well, from Google's perspective, Google seems to think
tell me what Google
that
says.
appraisals are to protect the buyer. So, and I've heard this before, like they're for the buyer's benefit, blah, 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 blah.
Well,
and
it is in the buyer's contract. It is their contingency. So.
Yes, I get that. But I mean, essentially, I don't think that the bank would make an appraisal a mandatory factor unless it was to protect their investment because they're lending the buyer the money.
Right.
So that there's something to be said for that. They're protecting their investment. I don't think it's really for the buyers at all, but the buyers do have to have it.
The buyers have it. It's in their contract. And usually I do my contracts a little bit longer than the due diligence because I want to wait till that inspection home report comes in before we order the appraisal. And that's ordered through the lender.
Yeah, I typically write 21 days in.
Yeah.
If we're trying to get really aggressive, we'll get down to 15, but only if I know that the lender can perform on that. Because the lender doesn't do the appraisal, but the lender will order the appraisal. And let's start there.
Okay, let's start there.
So how does an appraisal get ordered? Often buyers will say, can I pick an appraiser? Can I contact an appraiser?
As if buyers know a bunch of appraisers. Like, oh, my buddy's an appraiser. It's fine.
Google told me.
Yeah, exactly.
Yeah, no. So, but you do hear that, or they'll say, does the seller pick the appraiser? Well, sellers would love to have that option.
Yeah, they would. They'd be like, this is the best 4 walls and roof you've ever seen. It's worth $1 billion.
Yeah. So back in the days before I was in real estate, that realtors would be able to pick appraisers, which still.
Oh, now you're going back.
Yeah, I wasn't there, but I've heard stories.
Yeah, so in the real world today, that doesn't happen. When you're going through your loan process, the appraisal is ordered through your lender, and it's under that appraisal contingency. So if there is a discrepancy in the appraisal, you have a bit of time to negotiate. Your EMD, your earnest money deposit, still protected there.
Yeah. And the appraisal will typically get ordered. The lender will send you the credit card authorization within the first couple days of opening escrow, because they cannot order the appraisal till they disclose your loan fees.
Right.
There's something called a CD, which is a closing disclosure that discloses all of your estimated fees that you're going to have for the
Keyword
transaction.
is estimated.
Estimated.
We're at the beginning of the transaction right now where this appraisal happens, and it's an estimation of what everything's going to cost.
Right.
They send you out the credit card form. Then you sign that. You sign your disclosures. I usually wait until I at least have the home inspection so I know kind of what the condition of the property is before we have that, because the appraisal is an out-of-pocket expense.
Yeah.
You're not going to be reimbursed for it. It's specific to that property, like
No.
the home inspection. If you fall out of that contract and move on to another one, you're paying for another appraisal. You're paying for another home inspection.
Yeah.
So, but that contingency is there to protect you.
Yeah, they're neutral third party. The appraiser is a neutral third party. So appraisal cost will be $600 to $700
Yep.
for your transaction. No, you do not get to pick your appraiser. The lender will order it through what's called an AMC, Appraisal Management Company.
Yep.
And the lender does not even get to pick your appraisal. They don't get to know who's going out there.
Right.
They don't get to say, like, hey, I like this guy, let's send him.
This guy knows what's happening in the market. He's tracking numbers. Let's take him. That would be nice, but
Yeah.
that we don't get that luxury. They
We
don't
do
get
not-
that luxury.
And it keeps the playing field fair.
Totally fair.
Yeah, totally fair. So the lender orders through an AMC. AMC has a pool of appraisers that, they hire. It's like their own little company, and it's just random. Like, hey, we pick you. You go out to appraise this property and tell us what the value is. So at that point, the appraiser's picked. They call. They go out to the property. Sometimes the listing agent will meet the appraiser there to provide their comps, their comparables of
Right.
what they priced the home on.
Right, I do. I know you do.
I do, yeah. And it's very, we're very governed, I guess, of what we can say when we go there, because we're not allowed, bribery doesn't work.
Yeah, and it's illegal, so we won't be
illegal,
doing that.
Let's go there.
Yeah.
Yeah, but.
I'm like, I love silver, but not handcuffs, so I'm not going to be arrested because I'm fooling around with something that's not in my wheelhouse. But yeah, they come out there. You can talk to them.
Yes.
It's not taboo. A lot of agents will be like, oh, you can't talk to the appraiser.
Yeah, that's not true.
Well, you can talk to them,
Yeah.
and you can give them information, but then once you turn over the information, it's not a tag along. You're not sticking around going, hey, I'm going to follow this guy around, and you're definitely not leaving your sellers with them,
Yeah.
right? You give them the information, cordially have your conversation. This is how I estimated the property at. I hope we're in line. here's my information.
Right.
There you go.
And that's good information, because sometimes when we're pricing a property or pricing a listing, we'll pull, we'll find out. I mean, a good realtor is going to do some research, right?
Yeah, and usually even before we go out to take the listing appointment, and then we fine tune it when we're there to see, you know, finishes and, you know, any sort of unicorn on the property, like if there's solar or pool, because that all changes the value of the home.
Yeah, and that there's things that, there's times that an appraiser will go, and if you've ever had an appraiser come to your house, they're there for like 15 minutes. They're in and out. It's usually nothing long, nothing dragged out about it. But sometimes there's things that you've done that they don't know that you did, so you need to provide documentation, such as the AC was replaced within the last 5 years. Well, if it's in the last 5 years, it's considered an item of value.
Right.
If it was replaced 10 years ago, it's already on the downturn. They're not really going to add that as an item of value in considering the value of the appraisal.
Correct.
Water heaters, things like that, the roof.
Things you can't see. If there was just a bunch of plumbing that was redone, that's going to add value to the house.
Right. So again, having the agent come there with that printed out, you don't follow the appraiser around and say, this is added, this is added. There's a way to annoy someone.
Be
really
like, this is a brand new $2,000 toilet, so let's take that into consideration. No, that does not happen.
Right. So giving that information is always helpful, and it is, I think it's recommended. And that's always, there's some appraisers that will specifically, I've had management companies reach out when scheduling the appraiser that say we don't want the realtor there, you know, or we're going to have a time window and we don't want to fit into your schedule of what time to meet you. So in that case, we'll email the information over that we would provide them there, you know, there in person. Just make sure it gets in hand. I think that's very important. If you are, they're not going to always agree with your pricing, but it will be a considering factor.
Right. They'll take it into consideration, and a lot of time they have access to the same information that we have, so it's not 100% necessary. But I would say if you have like tons of upgrades, they're going to know that it's better than builder grade. They've seen house after house after house, but just give them an estimate of what that is like, because that's always helpful. And then any sort of improvements that have been made, anything of value that's on the property, and that way they can take all that to consideration. And some other things that people don't think about adding to those considerations are like any concessions that have been offered on houses that have sold in the neighborhood, because that changes the appraised value.
Absolutely. And distress sales, divorce sales, things like that.
Yeah, that's what I'm talking about.
Yeah, there's some.
All that's into consideration. Go ahead.
Yeah,
Sorry,
no, there's some cases where there's a house that sold, you know, all the other houses in the neighborhood sold at 500, but this one sold at 450 in 3 days, and why did it sell so low? The pictures look great.
Right.
And you talk to the neighbors or you talk to your seller and they're like, oh yeah, they were going through a horrible divorce. They just took the first lowball offer. They didn't have time to, they didn't even care about it. So that's notable. That's something that you can put in this report of like, you know, yes, I see this sell at this price, but this is, you know, this is what is said to be the reason behind that. So again, all of this should be in writing. Never expect to verbally communicate a bunch of things to an appraiser and expect it there.
Or a realtor.
Or a realtor. Typically, if you have it all in a nice printed, easy to read, easy to follow sheet, you provide that to the appraiser. There's so many times where I see that as part of the report.
Yeah.
At the very end of the report, they'll have the documentation that was provided, which is fair, neutral, all. That just means everything's been accounted for. So, you know, it makes sense. You have a good, you have what I would consider a good appraisal at that point in time.
Right.
The appraisers have a certain criteria that they follow when doing appraisals.
Yep. They have their standard system in place on how they take into account for things.
Yeah. Very similar to how realtors run comps, yet a little different. There's a reason why they're appraisers and we're realtors.
Right, same but different.
Yeah. Generally, and this is the way this is kind of a, I guess, a battle that I have sometimes at listing appointments, you know, with sellers, is because I say I'm running the comps. I'm not running the comps based on Zillow.
Probably a very good idea. You get a gold star.
Yeah, you know, that's a strategy for some people. but I don't believe in going 1 mile out for comps because we're in Vegas, and Vegas is so different.
Right.
1 mile out could be different types of homes, different, whatever. And appraisers typically have a rule where they go up to 6 months within the same subdivision, same model match. They do not, or model match, same square footage, but they don't compare like a single story to a 2-story.
Right.
Has to be the same type build, same year build within the same couple years. So they look for similar. If they can find 3 similar, there's no reason to go 1 mile out, and they won't. So I think that that's important even in pricing a home. Why are we trying to be super optimistic on something that's not going to happen once the appraisal comes in?
Right.
Yeah, so that's an important factor. That's how I start when I'm pricing a property, and it usually, in a lot of cases, usually matches the appraised value. The other thing that we both learned the other day is over our market, we all know, during the last 6 months has not been the same.
Yeah, we've had 2 different markets within 6 months.
Yes. So, and I've seen this in pricing too, of going back. I'm now when I'm pricing a listing, I'm going back a year, not saying that today's price is the same as beginning of 2022.
Except it kind of is.
It's not really though. It's still lower, but it's not at where it was in last quarter of 2022.
No, it is not.
So I'm kind of taking.
It's appreciated from there.
Right. It's appreciated from last quarter, but it's decreased slightly from the first quarter of 2022. So it's kind of finding the number in between there, which is.
Right. And anytime we have a shift in the market, that's sort of a nail biter when you do have an appraisal come out, because an appraisal will report like 7 to 12 months and 3 to 6 months and 1 to 3 months. And that way they know if they're in an appreciating climate or a declining climate.
Right.
And so all of that comes into factor. But when you move fast like Vegas, there's always a weird section between markets where appraisals come in different, either higher or lower. I love higher. Can we get all of my appraisals higher, please, universe? Let's do that. So that works out well. But if there is something going on, you do have the ability to reconcile that with, not the ability to, you can exercise an option to say, hey, listen, I'd like a reevaluation of this property for these reasons. And if you have something that holds merit, then they will consider it. It's not like they're so stubborn that they'll be like, oh no, we said what we said and that's it.
Yeah.
They're going to come in there and they're going to be like, okay, let me see what you're taking into consideration. And sometimes you can get that taken care of.
In an appraisal dispute, they want
Right.
data and facts. They don't want, I feel like this should be, because that's not going to be.
Like, I got 17 offers. I really believe this is the case. No, but there is a reconsideration of value that an appraiser can do if there is a discrepancy.
And that is the amount of offers, I believe, is a factor. I haven't seen that solidify, I guess. However,
It's like an unspoken rule.
there has to be some factor there, because if you're saying that a home is not worth what we're selling it for, yet we had 30 people that wanted to buy that home at what we're selling it for within days of it being on the market, how on earth could you say that's not market value?
Right. Well, the market determines its own value in real
Yeah.
estate. That's something for sure, because whoever's going to pay the highest is what the house is going to sell for, and then it goes on record. So I get that. And they do try and keep it a little bit. I saw it most when they had that 21, 22, and everybody was paying over appraised value or waiving the appraisal, that the market just sort of steamrolled over everybody. But for the most part, they're going to be like, okay, this is the real market value.
Right. Right. And before we get into like what happens if an appraisal comes in low and all that stuff, which we'll wrap up with that, like the finalization of that. There's a couple other things that I think are common questions that we get asked in regard to appraisal. Pool value. We're in Vegas.
Everybody loves a pool. I love a pool.
We all love pools, right?
Exactly. But if you want a pool in Vegas, I always tell people buy a house with a pool. Because even if you have to put money into it, you have to have it chipped and plastered or repainted or pool equipment redone, whatever. It's always going to be less expensive than putting one in from the jump. And you are not going to get your return on investment in a pool.
Right. And some people want that. They want their specific pool. They have a layout, how they want their pool, how they have everything. They don't want to remodel an old pool, and that's fine. As long as you know that you have the understanding that that pool could cost you $100,000, could cost you more than $100,000, yet your appraised value for that, based on the neighborhood location, that's always going to change because it's going to be based on the other homes with pools that have sold. But we're still looking at average between $30,000 and $50,000 that they're giving for pools.
Yeah, back in the olden days when I started real estate, I'd be like, pool, 20 grand. We'll add pool,
20 grand. That
20
was
grand, 20 grand. And that was it. And that was when you were building pools for like 40 and 60 grand. Mm-hmm. And, now to put a pool in Vegas, you're looking at anywhere between 85 to 120,000 for your average pool. We're not talking LED lights and water features, waterfalls or slides or anything. You just got a pool to enjoy, and it's beautiful and it's great, but it's still going to cost you 100 grand, and an appraiser's not going to give that to you.
Right.
They're going to give you a percentage of that. So if you're putting in a pool because you want to put in a pool, do it, enjoy it, live your best life. I love that for you. But if you're putting in a pool because you think you're going to make money on the resale side, yeah, that ain't going to happen, kid.
Yeah. That does depreciate. It's like a new car. Like right when you sink it in the ground,
I was going to say something like that today. In consideration of it, I'm like, what has faster depreciation than vehicles? Pools.
Yeah.
Putting in a new pool.
Absolutely. And then there's the closet.
The closet.
The closet.
Which is one of my favorites. I love a good closet.
Oh, closets are great, right? But there's this thing out there that if it doesn't have a closet, it's not a bedroom. And I can tell you, I've questioned so many people on this, appraisers. I called the county assessor. I've talked to a lot of people, and I get a different answer from everybody. So I really would say that really is a determination of the person that goes out and does the appraisal.
The appraiser.
Yeah. The appraiser, unfortunately, they get to make that call if they want to call it a bedroom or not. What I have heard from the county assessor is that to be a bedroom, it has to have a window, ingress, and egress. They were a little vague even on the closet being mandatory or not mandatory.
Right. So where that all stems from is when we first got into real estate, it was basically closet, window, door. This is a bedroom. And then just recently, that's sort of been taken off the table where, no, that doesn't happen. And like you said, ingress, egress, and your window, then it's a bedroom. And your appraiser is going to have literally the authority to decide how he's going to rate that room or classify it.
Right, absolutely. But the office does have a classification of value of its own, too. So that's not to be unsaid. And it does need to be at least 10 by 10. Less than 10 by 10 is not a bedroom.
It's a closet.
It's a closet.
Speaking of closets, that's what that is.
So those are the rules there. Now, if the appraisal were to come in low, so if you're on the buyer side or you're on the seller side, the appraisal comes back. It comes in below your purchase contract price. You're getting a loan. You then have 3 options.
Yep.
First option, cancel. I'm not moving forward. That's not worth what I'm paying. I'm not moving forward. Before you do that...
Yeah, which to me is always a last resort.
Last resort,
yeah.
Right? Before you do that, you go to the seller.
Right, there's a renegotiation option there.
As long as you're still within an appraisal contingency, which is written in your contract.
Right.
Go to the seller and ask them to renegotiate the price. I always go for, sell it to me what it's appraised for. This is the appraisal. We have it in writing. Here's all the documentation. You sell it to me for that.
On things like an FHA loan, that appraisal sticks with the property for a while, so you're stuck with it. So that's all great negotiating in FHA. Be like, well, listen, this is what the appraisal's on the property. So if you're going to sell it to somebody else, it's going to be at this price unless they want to come over appraised value. We're already in contract. My client's interested. Let's just make this work.
Right. And then the other option is cash above. Sometimes the seller and buyer will split the difference. Sometimes the seller will say, buyer, you have to pay over the amount if you want the house. And sometimes buyers are like, I want the house and this is
Kick rocks,
what it's
I'm
going
out.
to take, you know, and it depends. It depends on, you know, what the situation is. Sometimes I've had many a times where buyers say, I want this house, and if it's going to be $10,000 or $5,000 difference, and that's what it's going to take to get it, it's worth it to me, I want it. And by all means, that's the beauty of real estate is you can.
It's just two people coming to terms to sell that property. We're here to facilitate and help you navigate. But in reality, when seller and buyer can come to terms on something, then that's when a deal closes, period.
Yep, absolutely. So, yes, that the thing that is most important about all of this is if you're getting financing, your bank will not give you more than the home appraises for.
Absolutely.
So that is that's the essential message of today's show.
Yeah, and if you're a cash buyer, you don't need an appraisal. You can do what you want.
But you can still have one.
You can still
You
have
can
one.
always have an appraisal for your own benefit, even if it's not required. Sometimes lenders will waive an appraisal, based off of they do what's called a desktop review. And I heard even now that they changed the criteria of that they'll still require a walkthrough just to make sure the house is there, the roof's not falling in or something
right,
like that.
The structure's sound.
Yeah, but
Sometimes they just do it from the car. When they do the desktop appraisal, they just drive by the property.
Yeah.
Just to put eyes on it, make sure it's not like fire damage or anything weird.
Right.
For whatever reason, they're going to go out there and it's quick. And that's basically a very analytical way of doing the appraisal because it's all automated. It's run through a system, lot size, year built, whatever. This is what the home should be valued at. Does the market
Right.
support it? Great, let's do it.
Right, and if you do that, if you do have a waiver, an appraisal waiver, you still have the option to say no, I want a physical appraisal, and as long as you're paying for it, you can still have it happen. Doesn't mean that you don't have that you don't get to have that if it's something you really want.
Right, and that's for your own edification, though. If you sign the waiver, then you don't have that appraisal contingency.
Yeah,
because
it's
you've
just-
waived it, basically.
Yeah.
And so that's for your own edification, has nothing to do with any sort of renegotiating or helping in that contract.
Right. Yep. And then in closing, if the appraisal comes in higher.
Woohoo! We're popping bottles at that point, kids.
Yeah, but
You're walking into equity.
Right. There's a lot of buyers and sellers that say, like, does that mean I get more or does that mean I have to pay more? No.
No.
Our contract is our contract. So if the appraisal comes in higher than the contract, the buyer has no obligation to provide a copy of the appraisal to the seller, whether it's higher, whether it's on point, whether it's whatever, because that's a negotiation tool in itself. Even if the appraisal comes in at
And
value,
it's the property of the buyer. They've paid for it.
They've paid
They
for
don't
it.
have to share it if they don't want to.
Right, and if it comes in at value, if negotiations go south on something else in the transaction, they provide the seller a copy of this appraisal. Well, the seller already has something of value for the next sell, and the buyers, in a lot of cases, are like, I don't feel like I should provide that to the seller.
Right.
The only time you have to provide it to the seller is as proof of a shortage.
Yep.
Yeah.
Yeah, so your appraisal comes in low, you want to sell your house for $500,000 and the appraiser says, oh, it's $480,000. Then that gives you the ability to negotiate. Now you have that paperwork to sort of support your stance.
Yes. Yes. So good news is it could go higher and you don't have to pay extra. And
if it goes lower, you get the ability to renegotiate. And most of the time, the renegotiations come to some sort of resolve that is still closing that deal. Not all the time. Sometimes you lose a deal over an appraiser. So, they have a bad rap in our business. Appraisers are awful. They're not. We love them, and they're doing their job. And so that gives you the ability to renegotiate, which is always nice.
Yeah. So if you need more information on appraisals, or you want to talk more about it, or you want to talk about what your home value might be worth, Tiana, how do people reach you?
If we'd like to have a conversation about that, you can give me a call or shoot me a text, 702-379-9948. Also have this conversation with Trish Williams. How do they get a hold of you?
702-308-2878. And you can call me or text me, and we will always be here on Thursdays.
Yes.
So we will see you next week.
So make sure you like, share, subscribe, so that way you're notified on our Thursdays and can come back and check us out. Until then, you guys have a great week.
Have a great week. Thank you.
Bye, Vegas.